Are we bullish now? Geez, this market is throwing us up, down, left, right, side to side. Holy moly, guacamole. You're watching the Stock Market Brief Show. My name is Michael Silva. Today's date is February 8th. We got a lot to talk about today. We're going to be getting into a couple of sections. There are going to be timestamps in the description below. I included another section called setups. I'm going to be showing some charts that I think that could be potentially good trades here in the near future. Yeah, let's just go ahead and get into today's show. Welcome back, everybody, to the Stock Market Brief Show. Before we get into it, make sure that you go ahead and hit that thumbs up. It's greatly appreciated. That's how you sponsor these videos. This is how it gets in front of more people. One, it's greatly appreciated. I typically get around 10,000 views per video and, like a few hundred likes. So I would really appreciate if you just take the time to do that for me. This is, a lot of work that goes into these videos and putting all this content together. Let's look at the 11 sectors that make up the S&P 500. What do we got going on? Well, financials was the leader for the majority of the day-to-day as that 10-year yield was rising, but it started to come off. Materials and consumer discretionary, XLY, started leading the pack, especially when we started to see Amazon really start to take off, as well as Tesla. Towards the bottom of the list, energy took a little bit of a breather today, so that is one thing that we're going to want to keep an eye on. I have timestamps in the description, by the way. I'm going to be including a section called setups and in today's video, where I'm going to show you some charts that look like good potential plays here in the near future. Let's go continue on to the yields. What took place in the yields? Not much that to call out other than they just keep on looking like they're getting tighter and tighter here. The 10-year yield was up around 2% today on percentage basis terms there. And if you look at the spreads, the 10 and 2 and the 3 and 5, they did flatten out ever so slightly today, but still not that big of a movement. I would imagine we can see a little bit of shift here come Thursday when the CPI data comes out. I believe Wednesday is the PPI, Thursday is the CPI. Let's continue on. The TNX. So the 10-year yield rose up again. So we were looking at this little inverted hammer. Well, it still bumped up and moved a little bit higher, and that really did help out financials early on in the trading session. Now, energy took a little bit of a back seat, so maybe energy and oil might be giving us a little bit of a heads up. Now, what's going to hit all the headlines coming very soon, right? So today we hit a high of 1.97, right, on the 10-year yield. It says 19.71, but really it's just a yield of 1.97, right? So if we get into 2, right, tomorrow, the next day, or when CPI prints, right, if we get there, everything's going to be, our headlines are going to be painted with the 10-year yield rising to 2.0, which has been quite some time since we've been there, really since the pandemic, right before all the yields started falling off. Now, if we take a look at WTIC, also started breaking down from this wedge pattern here. PO is starting to curl itself back over. We'll see here if this is a break where we get a little bit more breathing room. It could be pretty a dramatic move to the downside because of just how lengthy this move has been to the upside. But if we do start pulling back, look at that 20-day, and then also this little zone right here, about 85 for potential area of support, right? We broke, it was resistance, resistance, resistance can become support if we do continue selling off right now. Dollar, not much change, just up slightly. Could be potentially flagging or just basing out. It's still, sideways in a channel. Not much to report there. If we take a look at the TLT, I should have put this after the 10-year yield, but this one also down on the day, just keeps getting crushed, but it does look like it's getting pretty steep, wedging like this. So look for a potential pop here in the near future, but as it stands right now, the trade just hasn't set up as of yet. Now, if the 10-year yield obviously starts backing off, that's going to change. Now, from a good note, we did see volatility kind of subside here, and what you can see here is the VIX is now closed at 21.44. That was under a pretty key area of support at 22. If we zoom in on that 30-minute time frame, you can see 22 was holding up, quite a bit. You can see just looking back to the left of the chart. Now we still have these gaps beneath us. If we get these gaps filled beneath us this week, I would imagine that we'd see the indices run a little bit higher here, which could be bullish, obviously. Now, the VXN, I wanted to take note that it is still relatively high. This is NASDAQ vol. It is now below that 30 level right there, so it's good to see that coming off if you are a bull. RVX, this is Russell volatility, still relatively high here too as well, but we're getting back beneath that 30 level right there, which is positive sign as it stays now. Now, that can change very quickly, but it is good to see it come off a little bit. I will say it is still above that 20-period moving average. I don't have the moving average here, but I would imagine it's right by the same moving average there too as well. Bitcoin to gold ratio, or the sailor to shift ratio, sailor to shift tool, it is still remaining as it stands right now above that 0 line. So that's a positive sign for Bitcoin, right? So we crossed over, then this was the new week, and then we had to wait for it to cross above. That was the buy signal, so we buy in on that break. We saw a little bit of sell side activity today in the price of Bitcoin, but it was recouped for the most part as we're tagging in that 45 range. If we look at a daily chart of it, you can see it's a pretty extended, right? That's a very strong move right there. So to see it back off a little bit, absolutely more than possible. I wouldn't mind to see it come back down and then base around, right? Keep in mind, these signals, as I stated in yesterday's video, they can be whipsaws, right? I'm trying to catch larger moves here. So, you know, I'm using a 4-week rate of change as it's pointing up. Now it's starting to flatten out here, so we'll see how it finishes. But if we do get back beneath that, then what I do is I look towards the previous week, and then I have my alert or stop set down there. The goal here with this strategy and this tool is just to outperform the price of Bitcoin, right? I want to catch the moves to the upside, but I want to save myself from this type of downside, right? And as you can see here, the sell signals that have been triggered have saved from actually all the big crashes in Bitcoin with this indicator. If you just take a look at the price of Ethereum, Ethereum's also getting pretty overextended too as well. Overextended, could stay overextended for quite some time. We didn't recapture that 50-period moving average, and we're coming into that 50-period moving average also that is declining. So, you know, as long as we can hold up here and potentially flag, that's good. And then we might be setting ourselves up, you know, a potential inverse head and shoulder. We have a left shoulder, head, right shoulder, and then, hey, that sets us up for a potential move higher. But we'll see how this develops here in the near future. Let's hop in the indices. Okay, so what do we got going on? Well, first off, we have a bullish engulfing candle. Not the greatest volume coming in, but that's totally fine right now. From a bullish perspective, if you're looking at this as a potential bull flag, right, what we'd want to see on a break, say tomorrow, is a little bit more volume step up. And if we do get some more volume coming in, I would imagine that it's very possible to come up and try to test this 460, which is the upper risk range that we determined last week on the weekly recap episode. If you take a look at the 15-minute time frame, I think it's very possible for the market to try to get this gap filled. The fact that it hasn't tried yet is a little concerning, but what we see here is a little, I could consider this, you know, a VCP, volatility contraction type pattern. As you can see, price here, you get this big dip, and then it dips a little bit less, comes up, dips a little bit less, right? And then it's tightening up right here. And you can see as price is tightening up right here, you have a little bit of a left shoulder, head, right shoulder, and then we just got back above that neutral 5-day moving average. So we'll see what happens in the futures market, but yeah, to me, I'm positioned to be bullish here, and if we do pop up, I'm looking to get this gap filled and try to come tag that upper risk range here too as well. That can change very quickly. So what you want to do is, if we start to turn around, make sure that you have stops in place, you know, wherever you feel comfortable, because there's still always a possibility that we can crack down and we can head lower, right? Volatility is still being priced into the market, and we're just really relatively going sideways. So it's been a difficult environment to navigate, but we're doing our best that we can. We got to look at it from both perspectives, bearish and bullish. Let's take a look at the Qs. Qs have been getting pretty tight here too. You can see we have a lot of lower highs taking place. So lower high, lower high, lower high, lower high. But you can see price is getting pretty tight right here. It could be potentially a bear flag where you can see this pull and then we head down a little bit more, or you can potentially look at this as, you know, a bull flag, or, you know, a film like this, a bear flag. There's so many different ways you can look at it. But what I like here so far is this is I guess you can consider this a bullish engulfing candle. At least the body itself engulfed the previous day's body. But really, you got red, green, just kind of chopping back and forth right here. So I'd say if we start cracking above this 360, that opens the door to retest that 200-day moving average and potentially even reach up further to that higher risk range of 370. Things are coiling up very tightly right here, so I would expect that we can see some fireworks come maybe the PPI, which is tomorrow, or the CPI data, which is Thursday. If we take a look at the 15-minute time frame, very similar situation. As you can see, kind of VCP characteristics here. If you don't know what that is, it's Mark Minervini keyed that term, or termed that, keyed the, I don't know what I'm trying to say there, volatility contraction pattern. Really, it's like an ascending triangle, if you're being honest. Like, so it's where, you know, volatility expands and then it contracts. And you could see that kind of taking place right here too. You have a potential inverse head and shoulders. The neckline, the 5-day is kind of declining, but we did try to recapture that towards the end of the day. So if we do get some sort of gap up, right, I wouldn't be surprised to see the market gap up. And here's why, is because when we come into this hard area of resistance during the cash market sessions, a lot of the times what happens is the futures market typically gaps us up over into it the following day. You know, it hasn't happened yet, but it's something to keep a close eye on. So if we do start moving up, start looking at this level here and this gap for being an area of resistance if it's filled. Okay, and the same thing goes if, you know, you got to monitor your stops, right? You know, have some stops in place wherever you feel comfortable, because if things start breaking, things could fall hard and fast, right? We've seen stocks rip up higher. We've seen stocks fall down. Okay, so we're still relatively in a sideways chop range. If we take a look at IWM, a lot of small caps performed very well today. And you can see we still have the higher lows being built, and we're still bumping into this 203, you know, right around where did we close? 202.76, a high of 203.12. So yeah, about 203. So it's just this tight pattern right here, and it could be very well a bear pennant that's forming, right? But if we start breaking out, I think that it's very possible to tag that upper range, maybe even extend past it a little bit, and we can see a potential back test of that 210, 209 area if we do get some continued momentum in IWM. If I take a look at the 15-minute time frame, we are back above that 5-day moving average. It is, you know, rather flat to inclining right here, and you can see here just a lot of supply as soon as we get up into these levels. And you can see, you know, the dips getting a little bit tighter right here. So it could very well set us up for a move to the outside. Now, be careful. This market is tricky, right? And you can see that volume shelf profile here, right? The market's been tricky. We might get a big pop and people start jumping in, but don't ever rule out the fact that it can't be some sort of a bull trap too as well. So, you know, right now as it stands, things are looking pretty good. Got some good bottoming patterns forming, but still don't just ignore the fact that we're just relatively going sideways as it stands right now. Let's hop into some setup charts. Okay, these charts are going to look a little bit different than I usually post. I post these ones typically, or charts that look like this, very frequently in my Discord. I think it just looks a lot cleaner for the most part. Well, so let's just hop into it. So I'm going to go over a couple of sectors here. So XLP is more of a defensive sector, and I see this broadening wedge type pattern in bullish context. I think that this can still, you know, consolidate sideways, you know, price get a little bit tighter, but to me this looks pretty bullish, so I'm looking for a break above. I'm in some utility names, I'm in some consumer staple names right now, you know, I'm in quite a bit of stuff actually as it stands, but overall, this looks like it could potentially start heading higher, especially if we have more of a, not necessarily a risk-off environment come, but even if we do have a risk-off environment that does come, I think consumer staples plays out pretty well, as well as potentially utilities catching a bid too. If we take a look at utilities right now, you have also a broadening wedge type pattern here. So, you know, contracted right here, expanded down here. I'm looking for price to try to contract a little bit tighter. The relative strength line looks good, right? It's a positive divergence on relative strength to the S&P 500. So if we can recapture those, the 50-period moving average and get that 20-day moving average back above it, you know, we're not too far off, and that right there can set us up for a good long position, maybe above 69.50, and maybe come retest the previous high or even head higher. So it still has some work to do, but I like the setup overall from a defensive perspective. Technology, is looking okay at this particular point in time. Not great, right? It still has a lot of work to do. We bounced, we recouped that 200-day moving average, right? We, had some massive volatility. Now price is getting a little bit tighter here. We got back above the 20-day moving average, and it looks like price is flagging a little bit in this sector. So if the 10-year yield backs off a little bit, I know we have a lot of economic data coming out, but this does look like, with a bullish engulfing candle, that if we get some follow through, not only will the Qs potentially lift, but we might go retest that 50-day moving average, which is declining right now at this particular point in time. So it does look decent as it stands right now. But remember, if we break out and you take a trade like this, always remember to have a stop in place or below the 200, as price has been tightening up, and it's giving us the ability for a better risk to reward trade. If we take a look at healthcare also saw a nice bid today, nice bullish engulfing candle. It's breaking out of this trend line and this potential flag pattern here. We do have the 50-period moving average, which is relatively flat. We recouped the 20. This is looking decent overall. So I'd expect that we could potentially get a little bit of follow through here. Not too much volume came in on this little break here. So I want to see if we do all of a sudden get a big volume day to potentially push us a little bit higher. I'd like to see 134 recaptured and get back above that 50-day moving average. But as it stands right now, it's looking pretty decent right now for an entry point. But you want to have a stop below that 200-day if you're a longer-term holder, just to protect that. Or if you're a little bit tighter on this specific candle, you can have a stop below the low of that candle too as well. If we take a look at IBB, biotech's been getting completely obliterated, right? From 177.50 down to around 122. We are catching a little bit of a bid here, right? Now price is consolidating again, potentially flagging. Look for the 20-period moving average to be recouped. But on a breakout, and if we see some good volume, I don't see why this can't be a potential trade up into the 50-day moving average if we want to get a continued bounce here. So always keep open for these counter trend bounces, but just always take note of the context. You would be buying long technically in a setup like this, but you're buying so in bearish context, which is, you need to be a little bit more aggressive. You need to maybe lower position sizes too as well. If we take a look at XLY, XLY has been seeing some positive developments, but I drew this out just as a precaution. We are trying to get back above that 200-day moving average. So from a bullish perspective, capturing 187.50, we might get a little bit more of a pop to around the 50-day moving average. But even if we get the pop higher, it could still well be within this bearish pennant, bearish flag type pattern. And that is one thing that I want to just kind of continue to watch here as price doodles around in coming days. Now, if we take a look at financials also have been just on this monster rip, up even further today, up 1.39%. But we are on a very aggressive move to the upside, right? Where there is a gap hiding out right there. So this level, this red resistance, we might find a little bit of resistance there. As a lot of charts like AXP, for example, American Express, I believe, if I'm correct, is the right chart. It's, if you look at a daily chart of that, it's been going completely vertical. So to see that take a little bit of a breather here momentarily makes a lot of sense. So overall, though, it is in bullish context, but we've just been trading sideways. And when we trade sideways, you can very well come back in and come to the middle of the channel or potentially the lower range. So not the exact place where I'd enter long, but potential watch for a pullback to buy long, or you can look for shorting opportunities. And the last one is energy. I've been talking about this one for quite some time. Actually, no, this isn't the last one. I have a couple more. Energy did break down from this rising wedge, still in very bullish context. I would expect to see this still, take a little bit more of a breather, maybe reconnect with the 20-day, see how price kind of reacts around there, and then go from there. If you like shorting's a lot more difficult to do, but there is a ticker symbol called ERY, and that allows you to be 2x short. Not a recommendation. If you understand how those work and how they operate, then by all means you can take a look at it. If you take a look at Apple, this is pretty bullish right here. Little bull flag. Price came from a nice earnings move right here, and now it's back above the key moving averages, and we're starting to move higher. So this looks like it's setting it up for a run to all-time highs. We'll see if Apple can continue that out. So this breakout right here could take us even past that, but definitely seems like it can reach if everything stays course as relative strength stands high. 182.50 could definitely be in the cards here for Apple. Another one is Google. I was posting this one intraday. I was looking at this gap, so power earnings, right? So we had this big earnings, and then it started selling off, and then I was watching a very close eye on this gap right here to get filled for an intraday bounce. Well, we came a little bit lower, but then we did find ourselves our footing intraday, and we started bouncing over that level, create a nice hammer candle. So this could very well be just a very, calm sell-off right here as, price went to all-time highs. Now it's selling off, and we might get, with this hammer candle, a continued bounce. But it is still below that 50-day declining moving average. So, a lot can happen still. Hopefully these setups kind of give you an idea and some, insight into what I'm looking at. Just to wrap everything up in the conclusion section, everybody. The 15-minute charts right now seem very important to keep an eye on, right? As volatility looks like it's contracting a little bit, it seems to me like we'll see some explosive moves here. Whether that's to the upside or the downside, I don't know yet. But what I can tell you is risk is setting up for a good reward, whether you are a bull or a bear in this particular point in time. Hope that helps. See you all on the next episode.